Welcome to today's What Moved the Market show. I'm your host Prem. It's Thursday, October 23rd, 2025, and here is everything you need to know as the markets close for today. Indian equity indices wrapped up their sixth consecutive winning session today, though they surrendered most of their intraday gains to settle with modest advances. The Nifty 50 closed at 25,891, inching up just 23 points or 0.09%. The Sensex ended at 84,556, gaining 130 points or 0.15%. Bank Nifty closed at 58,315, adding over 300 points from previous session's close. Both benchmark indices touched fresh 52-week highs during the session, with Nifty hitting an intraday peak of 26,104 and Sensex soaring to 85,290. However, profit booking at higher levels saw them par nearly 230 points from day's highs for Nifty. The Indian rupee closed at 87.86 per US dollar, reflecting marginal strengthening for the day. Over the past month, the rupee has gained approximately 1% against the dollar, providing some relief amid global currency volatility. The IT sector stole the spotlight today with stellar performances. Infosys surged 4% after promoters opted out of the company's 18,000 crore rupee share buyback program, signaling confidence in the stock's long-term prospects. TCS and HCL Technologies gained over 2% each, riding on optimism around a potential India-US trade deal that could reduce tariffs substantially. Beyond IT, Axis Bank, Kotak Mahindra Bank, Shriram Finance and Titan Company advanced over 1% each. The day's surprise winners were textile and shrimp exporters. Vardhman Textiles skyrocketed 11% on hopes that tariffs on Indian exports to the US could drop from 50% to 15 to 16%. Apex Frozen Foods rallied 13%, while Coastal Corporation hit the upper circuit with 20% gains. On the losing side, Eternal led decliners, shedding 3% and emerging as the top Sensex loser. Bharti Airtel, Ultratech Cement, Adani Ports, ICICI Bank, and Reliance Industries declined 1 to 2% each. Interglobe Aviation, Tata Consumer, and Eicher Motors also featured among notable laggards. Nifty tested the crucial resistance zone of 26,000 during intraday trade, but failed to sustain above it, eventually settling below 25,900. On the downside, immediate support is identified at 25,800, which held firm throughout the session. A breach of this level could extend the decline toward 25,700 to 25,600. For Bank Nifty, the index is trading with strong momentum above 58,000 levels. Key resistance lies around 58,600, while support is seen at 57,900. The Nifty IT index was the standout performer, surging over 2% and leading all sectoral indices. The Nifty Private Bank Index added 0.5%, supported by banking heavyweights. Financial services and select export-oriented sectors also displayed strength. On the flip side, the oil and gas index declined 0.6%, weighed down by concerns over fresh US sanctions on Russian oil companies, which could impact India's crude import costs. The Nifty Infrastructure Index slipped 0.55%. Broader market indices turned negative, with the BSE Mid-Cap Index falling 0.2% and Small-Cap Index dropping 0.5%. Market breadth was negative, with over 2,400 stocks declining against 1,800 advancing shares. Gold prices on MCX rebounded nearly 1% today after recent sharp declines. In the physical market, 24-karat gold was quoted at 1,25,890 rupees per 10 grams. Silver also bounced back. Physical silver prices stood at 1,60,000 rupees per kilogram. Crude oil prices jumped nearly 3% as India announced plans to sharply reduce Russian oil imports following fresh US sanctions on Rosneft and Lukoil. Brent crude rose to $64.53 per barrel, while WTI climbed to $60.39. This development could increase India's crude import costs going forward, potentially impacting refiners' margins and inflation outlook. Today's market sentiment was significantly influenced by evolving US-India trade dynamics. Reports indicate both nations are close to finalizing a trade agreement that would substantially reduce US tariffs on Indian exports from 50% to 15 to 16%. This optimism particularly boosted IT, textile, and shrimp export stocks, which derive substantial revenue from American markets. President Trump's comments regarding India reducing Russian oil purchases added another dimension to the geopolitical landscape. Fresh US sanctions targeting Russian oil majors Rosneft and Lukoil are forcing Indian refiners to reassess their supply chains. This could disrupt the discount India has enjoyed on Russian crude over the past 2 years and shift demand toward Middle Eastern and African suppliers. Asian markets traded lower amid lingering concerns over US-China tensions, with reports that the White House is contemplating restrictions on software exports to China in response to Beijing's rare earth limitations. These broader geopolitical uncertainties kept global risk sentiment cautious. Nifty's technical structure remains constructively bullish as long as it holds above 25,800. The index is trading in an uptrend channel, though today's long wicket candle suggests bullish exhaustion at higher levels. Immediate resistance for tomorrow's session lies at 26,000, with further barriers at 26,100 to 26,300. On the downside, 25,750 to 25,700 forms a critical buy-on-dips zone. A decisive break below 25,600 could trigger profit booking and extend declines toward 25,500 or lower. For tomorrow's session, traders should watch for whether Nifty can reclaim and sustain above the 26,000 psychological mark. The market's ability to digest recent gains while absorbing fresh global cues will be crucial. Options data indicates strong put support at 25,600 to 25,700 and heavy call writing around 26,000 to 26,200, defining the near-term battleground. Here's your key takeaway for tomorrow. Watch the 25,800 level on Nifty closely. As long as the index holds above this support, dips toward 25,750, present buying opportunities, especially in IT and banking stocks. However, any sustained weakness below 25,800 could trigger profit booking, making 26,000 the critical hurdle for bulls to reclaim. With trade deal optimism supporting export sectors and FII flows turning positive, selective strength continues despite broader market consolidation. That's all for today's market wrap. Got questions about today's moves or specific stocks on your watch list? Send them my way and I'll address them in upcoming shows. Stay tuned for tomorrow morning's wrap and send in your questions. Until then, trade smart and stay informed.